Yeah. So at this point now, the market is just selling like that. So you see, so deposit is $100, then the profit is 3,000. Then if we go.
Examples where you find yourself in a trade that shouldn't have been triggered in the first place. I had placed a buy limit order, probably during a Zoom session, while illustrating how the market could move and how much potential profit could be made from a specific setup. But here's the catch. It was meant for demonstration, not execution. Yet, the order got triggered. Fast forward to this morning. My usual market routine, I opened my charts and realized that one of those demo buy limits had been activated. The worst part? It was triggered at the wrong level, right into a strong bearish trend. The market was going down harder. The trend was clear. It wasn't just a small move. It was a strong, clean bearish trend, breaking key structure levels and forming lower lows and lower highs. That buy was fighting the wave and obviously not the smartest move. What I did next? 1. Identify the key retracement level. I knew the market would eventually retrace, even in a downtrend, so I marked the key return point, the last logical level where buyers might get involved or price would react. 2. Take the exit, secure the tip. As soon as price hit that retracement level, I exited the bad trade and prepared for the reversal. 3. Reverse the position, sell the strength. The market started consolidating at that point, signaling a potential continuation of the bearish move. I entered multiple positions in the direction of the trend, this time with proper confirmation. 1 hour time frame confirmed it all on the 1H chart. That impulse to the downside created a gap that needed to be retraced. That's exactly what the market did. It came back to fill the imbalance, tapped into the previous supply zone, and then resumed the strong downward momentum. Key takeaways: avoid placing live orders during sessions unless they're meant to be executed. Always cross-check the overall trend on higher timeframes. A retracement isn't a reversal. Identify your exit zone early. Trade management is everything. One bad entry doesn't mean a bad day if you adapt.
Take note, the red exponential moving average, when it's above the candles, you need to look for sell opportunities. So all the sales you're going to take by that time are going to be profitable. So there you have it, traders. So in many cases, you find yourself stuck in the trade which you're not supposed to be in. Maybe you've taken a trade in you've taken a trade against the trend, and you're trying to look for ways on how to get yourself out of that mess. In most cases, I'm going to give you one strategy, one tip. I won't say a strategy, but it's a tip which is going to help you out. Then by the end of the video, not really at the end of the video, somewhere along the video, you'll find a video where I'm going to explain on how to take the proper trades. So this one costed us. And if you take a closer look, the last point the market reached as per retracement, we took advantage and exited our entries which we took. And these entries were calculated according to the first entry which was triggered. And this was a buy limit which was left in the market by mistake, which was not looked out for, because the level is not really precise. If you take a closer look here, well, actually what we were anticipating was if the market reaches a support level, we're going to have at least a retracement. So actually we use that point to retrace, but it actually happened later on as a retracement. But in this position, the account was fairly small. This is a $1 account we're messing around with. So we couldn't risk too much. So we took 4 positions total, of which we closed at a good note. So if you take a closer look, we closed in profit. We never lost anything. Sometimes you have to just run off the market. You cut whatever it is. Don't hope for, no, let me make profits, let me make as much as I did in the losses and stuff. No. A bad trade is always a bad trade. Then you will see how much you're going to make if you take that proper trade along this video. So just pay attention, and you see what I mean. So what happened here? The trade was triggered, yeah, as you've seen. So you need to have a proper mindset towards such issues. Don't rush, be calm, make sure you calculate. I know the market is moving, but make sure you calculate. You make sure you do the right thing. This thing has been happening over and over again. And one tip, like I said, which I'm going to review to you, the tip, put it in your mind, write it down. I always say, write down the tips which I'm going to note out, so that you guys, if you're confused or if you forget, you're always going to read it, and it's going to help you remember. It's going to refresh your mind. So make sure you write everything down. Journal. Make sure you journal everything. Everything we're doing here, journal it. Take it serious, guys. This is part of your life, yeah? So yeah, that tip which I'm giving you now, it's going to help you out. The same way the market has sessions. We have a London session, we have the Asian session, we have all these sessions, yeah? The New York session, everything. You know about the sessions and everything. If you don't know, search about the sessions or comment in the comments. Comment. Then we're going to break down everything for you. And guys, please make sure you do the comments. Tell me what you want me to do next, and tell me where you don't understand, so that I can help you out in such situations, or where you don't see, or you know, we all have problems, so I can try and help you out as much as I can help you out. So yeah, like I said, sessions, yeah. So there are many sessions in the market, especially which makes the market to move the way it's supposed to move. The market just doesn't move the way it wants to move like that. No. It's triggered by something. So that something is going to be a session, or it's going to be an open of a major candlestick. So this, we're going to break it down now to candlesticks, because we're talking about structure. Let's trace about structure, the market structure. So candlestick formation. The higher the candlesticks, the more bias you're going to have according to the analysis. You understand? So if you go on the higher time frames, the higher time frames are the ones which trigger the smaller time frames. So let's say the smaller time frames make up the bigger candlestick. They give you the bigger picture. So if you are seeing the bigger picture, it consists of those smaller time frames. So what I'm trying to say here is, by the opening of a big candlestick and the close of a big candlestick, that's where the magic happens. That's where the move actually happens. So this is one tip I'm just going to give you. It's a giveaway, just to show you that we are adding value, and if you're going to follow, you're going to get more value out of it. It's going to help you out, scale up your account. It's going to make you compound that account, grow it from the smaller amount you get as possible as can. And with our journey, how we're moving and stuff, with the $1 account, we shall see. We'll reach a certain point, then we'll start even the smallest account. You know, it's all about timings and not just jumping into the markets anyhow. The market sometimes will consolidate, as you are going to see in this video. There's going to be that consolidation, and after that consolidation, we see those impulse moves. Those impulse moves are the ones which are going to make the money, and they're the ones which we mostly want to catch and ride on. You see? So make sure you do what? Whatever information I'm going to give you here is, you just don't have to sit and rely on all that information. What you have to do, guys, go back, do your back test, and everything which I'm going to give you, make sure you do your back test according to the market you want to trade. The system works on all markets, as long as it has a chart, as long as there's a chart and it's on MT5. Trust me, whatever market you're going to trade, the system is going to work without fail. It's going to give you the same signals. It's going to work the same way as it works on all the pairs, the indices, the forex, the minerals, the commodities, everything. You can name it all. So yeah, so make sure you take note of everything I'm telling you right now. Make sure you take note. So you're going to see also how the market moved and everything else. Anyways, so the point where the buy limit was placed is where the support was supposed to be. So after the break of that support, the market came to that point, created the resistance and continued going all the way down. So after the market dropped, went to the support point, we took some buy trades, and this is going to be an example of the buy trades we took and what happened later on after that first trade. Alright, so here's one of those examples where you just have to follow what the market is actually showing you. So here we had a signal. We saw that the market came all the way down with an impulse move all the way from that top. Yeah, so just after breaking the trend line, push price down. Then we are in the new 4-hour candle. So we knew that the market was going to do some retracement at this point, because we opened up a new 4-hour candle. So we took some buy trades here, So yeah, we just touched the first tip here, so hoping the market to come back to a second tip at this point. So we held the trades, went back to our entry, as you can see right there. Then now the market is pushing the price going all the way up like that. So we're still making some profits like that, some good profits like that. We pushed it a bit hard. So yeah, so market is so that's broken our first take profit. So that's hoping for it to push price up. Yeah, so that we reach a second TP. When I put buy ready there, probably I was using it for sale entries. But anyways, we're going to change the settings and stuff right there. But as you can see, we have passed our first TP. We can actually even put our, it is. Get this. Since this is going to be our sell stop, so put it. Just too close. Put it somewhere there. So we've locked in. At this point, we've locked in our TP. We've locked in like that. We're locking in. So the other thing is we can do is trail stops. Following it. So this is to show the power of the Fibonacci and trusting your strategy. Right there, as you can see, second TP hit, and we're in profits, guys. We're in profits, as you can see. So the entry there, entry 1, entry 2, first TP, we took our entries right at this point right here, but I had to hold because the Fibonacci was giving us the right positions and stuff. So you see, so second TP hit. This is our trail stop right there. As you can see, our trail stop is trailing the stops. As you can see right there, it's trailing the stops. So those are our trail stops. So once the market tries to do anything funny, it's going to trigger it, and we'll still be in profits. No loss at this trade. Yeah.